are you today with my dear friend Cheryl Stokes from New American Funding? Hello, Cheryl.
Hello.
It is our August housing update. Now, Cheryl, we did a special one last month, so you and I weren't together, which was sad that I wasn't with you, but we were with David Childers, who Keeping Current Matters, who is the economist that we listen to that creates all of these slides that we share every month anyway.
It was great.
It was a great session. If you missed it, make sure that you go check out our YouTube page or here on Facebook or Instagram, wherever you're watching it. But let's talk about August and what has happened July backwards, Cheryl. Should we just get to it?
I think we should.
Okay. So here we are with the housing update for August. And, Cheryl, I'm going to have to put on my glasses, Cheryl, sorry. What buyers are asking, whether it's true or not, is should I wait to buy? That is the big question on all of our buyers' minds. And for that, there's telling us about foreclosures are coming, prices are too high, inventory is too low, I should just wait. Are you hearing that, Cheryl?
I hear that every single day.
Yeah. Because they're nervous, right? That no one wants to buy at the height of a market and then have it fall and then hold an asset for lots of years that may or may not ever get to the value again, which is what happened earlier, 2007, 8, et cetera. So let's pack this a moment at a time, and let's look at foreclosures. Cheryl, talk about forbearance and foreclosures and what this looks like when you see this chart.
So what I see in this chart, and this is something that you and I have spoken about a number of times this year. If you look at May of last year on the left there, that height of forbearance, look how high it is. And now look at July of this year and how much it has gone down. We're getting back into the realm of the normal amount of forbearances and issues that happen in any year. We're no longer at that height where people were unsure of what's going to happen. They had the opportunity and they took the opportunity, but then quickly found out that they didn't need it and paid the forbearances back.
Absolutely. And if we look at that next slide, Cheryl, that's exactly what happened this time. Would you agree?
Absolutely. If you take a look at that, 44% of those that occurred last year have already been paid back in full. 38.9 are working out a payment plan, which is one of the ways to resolve it. And you have a small sliver, 17% are still working on it. But note that only 1.5% are in real trouble. And that's really, really low.
Without a doubt. And because of appreciation and other things, right, Cheryl? Read to us what Rick Sharga is saying from Realty Track.
Sure. While some borrowers will not be able to recover from the financial distress COVID inflicted on them and will face the choice of selling their home or losing it to foreclosure, there won't be enough of those properties to fix the supply-demand imbalance in the market. And they shouldn't need to be sold at much of a discount that they'll impact prices in any given market. Concerns over foreclosure increases have been wildly overestimated. And I would absolutely agree with that.
Cheryl, I love what I'm seeing here because I just was in Dallas a few weeks ago with one of the largest foreclosure agents out there in her market. And one of the things she was saying is the banks, the asset managers, are actually calling their partners in this to say, hey, can you talk to these people? Because I don't think we need to foreclose on them. I think there's enough appreciation in the property that they could sell it. Are you seeing that, Cheryl?
Well, I haven't seen it personally, but it makes sense just based on the data. Because if the prices have risen, which we know that they have, and someone's in trouble, let's say they've had that house for 10 years. Well, they had equity in it, and now their equity has increased. So if they choose to sell, that's going to take up that, and they might have to leave their home, but it's not going to be in a distressed manner. It's not going to hurt the overall prices of the neighborhood, and it's not going to create that buy opportunity where some people think if I wait, I'm going to snap up some foreclosures.
Yeah, you're spot on. As a matter of fact, we've seen this a lot, even as the market was increasing with people that you couldn't do a short sale because the banks, stopped having forbearance, right? And their property increased. So, which is awesome. And, just to kind of further this point along the line, an additional almost 500,000 foreclosures would make up just for the last 2 years that we stopped foreclosing, right?
Right. I mean, I think people have this perception that with the rise in the market and with COVID, there's going to be a lot of distressed people, and they don't realize how many foreclosures were happening prior to COVID.
That's right.
And right now, we're not seeing that number of foreclosures. So really, that quick opportunity that they think they might get when they wait, it's not going to happen.
Right. It's not going to be there, honestly. Right. And to this point further, Cheryl, the year over year 2021 housing appreciation on all levels, the Federal Housing Finance Agency Home Price Index up 18%. The CoreLogic Home Price Insights Report up 17.2%. And the bottom feeder of them all, 16.6% from the S&P. Case Shiller U.S. National Home Price Index. I mean,
still amazing.
Still amazing. We've come out of a crazy time. Now, Cheryl, you and I both know that if you find yourself in this situation and you're in pre-foreclosure and you need to get out of your home, just call. If not us, call someone that you trust that can walk you through this, because I don't want to take light of any of that for anyone sitting in those circumstances. But when you see this valuation of the homes, it's just crazy. I mean, and in the past, we would see those greater appreciations, Cheryl, in the lower end market, right? The homes that are priced in that 200,000 and under would see a higher appreciation just because the math is higher.
Right.
But I want to share with you, Cheryl, what's happening year over year, price appreciation, and this Keeping Current Matters put this together. If you look at the white line, and you look at that is kind of the average appreciation. But if you look at the yellow line, which is way up here, and the green line, which is high to medium to high price points, I mean, that is just unbelievable when you look at that. I don't know if you can see that, Cheryl, how much they've appreciated. I mean, they're above 25%. And if you just do simple math, 25% of $1 million is, if we had same amount of appreciation on $100,000,
right?
Way less, right? So if you're thinking you're going to buy and you want to move up, why wait? Because this appreciation for you in the move up is going to be even better.
Right.
Correct?
Absolutely. Absolutely.
And for my other folks out there that says, oh, no one's buying, the market's breathing, which it is breathing a little bit. Let's face it, it's actually a good thing it's breathing. We'll talk about that just a second. This one, Keeping Current Matters came up with this slide, and it said the share of prospective buyers who are actively searching for a home is greater in every region as compared to 2019. So if we look at the green number there in fourth quarter of 2019 versus the blue number in the second quarter of 2021, you'll see that is increased in every single market. So on the far left, because those are hard to read because they're in gray, is the Northeast. The Midwest is a delta of 10%. Here in the quote South, and I submit our percentage of people looking is higher than this, but I'll go with the fact that we're in the South, Cheryl. South is rising, baby. We're up by 12% based on this national study.
Yeah. And I think a lot of people, since they don't see these factors on a daily basis, that's why they don't understand that there's not going to be a downturn. The demand is higher than the available inventory, and the number of people who are qualifying to purchase is increasing. So that's just going to continue to increase the demand.
Absolutely. Absolutely. So those are all national numbers. Let's look and see what's happening, in our neck of the woods, so they say. So I just pulled this off of our Info Sparks, which comes out of our Naples MLS. Year over year for 2021. So this would have been July numbers through May of 2020, or I guess August of 2020 for 12 months. And this is the data they have. Our average close prices are up, average, not median, average, are up by almost 40%, 38.8. Crazy. Our new listings are down by 10.7%. And our homes for sale, Cheryl, are almost down by 3/4.
That's crazy. That explains a lot.
It explains a lot.
It explains a lot.
Right? So we don't have, why we breathed, so to speak, or we took a breath in July and some of August so far. And with our own listings, they haven't gone under contract with some of them yet, because we've had people that are exhausted. They've been losing out on multiple offers. So they're fatiguing the buyers. Quite honestly, our agents are fatigued. Cheryl, on our team of almost 50, we had probably more than half off in one of those 2 months, in July and August.
Oh, yeah.
They're tired. They've been running since May and doing a phenomenal job for their clients, but they're tired. And then let's face it, we can finally move about the country, as that commercial says, right?
Right.
We can travel. And so that travel with vacations, but travel so our consumers, if they weren't tired, they just wanted to get out and do something different.
Yeah, and they wanted to do that prior to their children going back to school. July and August is that time. First part of August is that time to just kind of step back, and it's always been that way traditionally. But I think it was more important this year than we've thought about in the past. So I think the trends that we've seen earlier in the year and last year are going to come right back in September.
Agreed. I totally agree with that. So let's kind of go down to that next path. All right. So we talked a little bit about this, and you saw on that one slide, Cheryl, that I showed you, luxury was going off the charts, right? That yellow line. Well, this is one segment of one market that we sell in. And this particular segment that I looked at is Marco Island direct access properties, right? And you'll notice in those three little circles that I have at the top, can you see them okay up here? The closed ones, properties that were 3 million plus, $1.5 million to 3 and under $1.5 million, were about equal in the last 90 days. This is a 90-day snapshot.
Yep.
Right? Around 33% each. Our pendings are about the same, if you will. It's hard to tell because these lines are a little blurry. It looks like the $1.5 million to 3 might have taken over a little bit more, but I think actually the over 3 million is a little bit more than that. But again, they're fairly consistent. But look at our active, Cheryl. That is the $3 million plus is actually more. It's almost 60% of our active waterfront properties on Marco Island, direct access.
Right.
And this is just one slice of data that I thought I'd bring into this particular section that we have on Housing Update, because we could do it in all of them.
Yep.
And the amount of inventory available is ridiculously low.
Yeah. And it shows continued appreciation, but also the amount of inventory in those other price ranges is dwindling tremendously. I was looking the other day. I have a house that's listed under 800,000 on Marco Island, inland home. And there were literally 5 properties, Cheryl, one without a pool, 4 others, mostly on busy streets, and this property that I had. And I'm kind of scratching my head that it's not sold, but what under 800,000, I don't know about you, Cheryl, but when I first moved to this area, I honestly was like, that was my price point, right? And now what does it get you? It's just crazy when people are moving from other areas. We have one of our agents' parents are moving down, and what they could get in the Carolinas for, 400,000 and what they can get here in Southwest Florida for 400,000 are two different things. They are not the same at all.
No. So that appreciation is really going up in those higher, luxury for us is, north of $1 million. Just kind of a crazy thing. Last but clearly not least on this is, are we in a historic seller's market, Cheryl?
Yes, we still are.
We are. We are. When you look at, we have inventory down by almost 75% and new listings down by over 10%. And our months of inventory are somewhere under 2, 2 and under. That's crazy. We have crazy low inventory. Cheryl, how are the interest rates doing?
The interest rates are still historically low. We've had some ups and downs a little bit throughout spring and early summer, but frankly, on average, they are in that same range that they have been for a year. They're historically low if you have been in this type of market for more than 10 years. They're still lower than we remember in our buying prime, and they're affordable. They remain affordable, and I think they're going to continue to remain affordable.
Yeah. The analysts are saying we're 2 to 3 years out with the trend we're on right now. So we started this question with why buy? Why wouldn't you want to buy? And more importantly, Cheryl, is it time to move? Because I submit the time to buy is now. I mean, I have several clients and peers that are in New York, and they're like, everyone's moving to Florida, Mary. I'm like, really? Everyone's moving to Florida. I think it's a fire sale on their properties in some areas. And, Chicagoland, where I'm originally from, like life is on fire because they want to get out because of high taxes, whatever the issues, COVID concerns, et cetera, et cetera. We are a place that they want to move to. So is it time to move, Cheryl?
I think it is. I think it's a time to move. I think it's a time to sell, and I think it's a time to buy. There are advantages to both.
Yeah.
And the fears that are out there to both are, just as that first slide said, they are vastly overestimated.
Vastly. I love the way you said that. My friends, if Cheryl Stokes at New American Funding. Cheryl, did I mispronounce the name in the first? If I did, forgive me.
You did not.
Okay, good. Phew. Because I'm still kind of, I don't know. I'm coming off of a crazy time in my life. Anyway, Cheryl Stokes from New American Funding, if she can help you with financing that piece of paradise and how to get in and win in a multiple offer because she's got strategies, or we can help you at the Bartos Group with one of our 50 amazing team members. We sure welcome the opportunity to guide and lead you through this process and to give you great advice on what you need to do in your next move if you so desire. So until next month, Cheryl, I guess I'm going to say adios. Goodbye. Ciao.
Ciao.